p.m. only on BloombergQuint.
Good morning and happy Friday to you. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. Asian markets begin the last trading day of the week on a subdued note. U.S. jobs data and an impending tariff hike on Chinese goods keeps investors on edge. Moody's downgrades Yes Bank's long-term foreign currency issuer rating by 2 notches to B2 from Ba3. The outlook remains negative. Air India posts its biggest ever loss of over 8,500 crore rupees. Aviation Minister Hardeep Singh Puri reiterates the committee will privatize, or rather the commitment will to privatize the airline. India's consumer sentiment falls to its lowest level since March 2014. Consumers, however, remain divided on whether an improvement is possible in the near term. And the board of All Cargo Logistics has approved the acquisition of 19.4% stake in Gati. Bloomberg News had reported about the deal being in the works in September this year. Let's talk about the U.S. markets now. They recovered from the lowest point in the day Thursday's session to end Thursday's session on a flat note. All 3 benchmark indices ended in the green after trading with losses for the most part of the day. More cues are awaited, of course, from the jobs data that is scheduled to be released later today. Abigail Doolittle of Bloomberg News wraps up Thursday's Wall Street action in this report.
Stocks were little changed in Thursday's Wall Street session. At the end of the day, after flipping between small gains and losses throughout the session, we had the Dow, the S&P 500, and the NASDAQ all climbing slightly, but less than 0.2%. That was true, too, for the Russell 2000. The chip index, or the SOX, that Philadelphia Semiconductor Index, was up a little bit more, up 0.4%. So everything recently has been about trade. No trade headlines on the day, therefore very, very small moves. But the fact that you have stocks finishing slightly higher suggests some investors think something constructive could happen before that possible December 15th deadline of the U.S. imposing tariffs on Chinese goods. That's a very important key watch for many investors. And one area of outperformance that was interesting, the emerging markets, the MXEF index finished up 0.7%. That was its best day in about a month. And that tells you, because that is further out on the risk asset continuum, it confirms the idea that traders expect December to be relatively calm, that they're not right now at least pricing in any ugly surprises. Speaking of surprises, Biogen, the biotech company, popping higher on the close, up more than 3% after there's hope around their Alzheimer's drug. Recent studies showed that there was no clinical change, but they're moving forward with it. That's enough for investors who would like to see some more growth. Sage, on the other hand, Sage Therapeutics plunged down 60% as a key depression study failed to show benefit. Really pretty extraordinary. Apple, on the other hand, one of the top stocks for the S&P 500, certainly the top stock from a point contribution standpoint, popping 1.5%. Citi expects a strong holiday quarter. And to round it out, oil was higher as that OPEC meeting's going on, waiting for a press conference. Bonds were lower, so with stocks slightly higher, it was a bit of a risk-on session for Thursday's Wall Street session. In New York, Abigail Doolittle, Bloomberg News.
Abigail just mentioned the Organization of Petroleum Exporting Countries, or OPEC, have been meeting, and apparently they've formalized curbing production, but supply levels remain barely changed. Crucial details are yet to emerge, and the cartel will meet again today for further negotiations. Anne-Marie Horden of Bloomberg News brings you the latest from Vienna.
Basically, they have agreed in principle on this 500,000 barrel a day cut. It seems like one of the main sticking points was from Iraq and Angola. But we have to think about what this 500,000 barrel a day cut even means. It basically could be quite symbolic, which is why what Sophie was saying there, we are seeing WTI under pressure, because basically it just formalizes what the group has already been doing for most of the year. Saudi Arabia particularly has been cutting well below their output target. And that's why you're seeing the market really not react to this deal where they say it's an increase. in actuality, is it going to be taking physical barrels off the market? That's what traders are looking for, and it looks like it's not. They left here without comments. Usually they give some indication of what was discussed. So there's no deal tonight, but tomorrow we have the entire cartel plus allies, mainly including Russia, back at the table, and we'll hear what they have to say then.
There seems to have been a lot more emphasis on compliance this time around. Why?
Well, one thing seems that this kingdom is getting very frustrated by the fact that they're the ones that have really bared the burden of these cuts to prop up prices. Iraq, Nigeria, Russia have failed to comply for the most part. So basically, the kingdom has been doing this strategy of a little bit of a quid pro quo. We're willing to maintain our cuts, but as long as you other cheaters get in line. What the kingdom does have in their back pocket, of course, is they've been cutting so far below their quota, they can, of course, potentially use that as a threat to take back market share.
All right, Vandana Hari of Vanda Insights believes that the devil lies in the detail. In an interview with Bloomberg Television, Hari said that even though OPEC has agreed to cut output by 500,000 barrels per day, the question remains, who will do the heavy lifting? Listen in.
I think the devil is going to be in the details, and the market is, as we speak, is still awaiting the formal decision. Word on the street, of course, is that they will announce a deepening of the cuts by about 500,000 barrels per day. But how exactly is that going to be distributed? And more importantly, is it simply a regularizing of the current cuts, which are already deeper than what had been pledged? So I think those are some of the things the market is going to be scrutinizing once the formal decision is out, perhaps expected later today.
And of course, there are a couple of OPEC members we've been discussing who continue to drag the chain when it comes to production cuts. Is there anything that the cartel can do to get member countries like Iraq into line?
Indeed, I think, and it seems like that is a major element of focus in these talks, and probably that's what made the talks drag on and become a bit difficult on Thursday. So what's going to be interesting to see is if Saudi Arabia, which has been shouldering much more than the cuts it had pledged the last time, whether it manages to lay off some of those cuts, essentially distribute them, and get the members who are lagging, especially Nigeria and Iraq, to comply. They have been overproducing. I think that's where the focus is going to be, especially with regard to the Aramco IPO. I think the investors are going to be scrutinizing this. You know, does Saudi Arabia end up cutting more than it needs to every time there is a cut?
Will 500,000 barrels make a difference?
So the question is going to be, is this 500,000 barrels what is already that has been taken out of the market, more or less? So OPEC was supposed to cut by about 800,000 barrels per day starting in January 2019 this year, and it has already cut by 1.2. So, 400,000 barrels per day of that additional cut is already factored in. So the question is, are they actually going to reduce actual supply by another 500,000 barrels per day, or are they simply regularizing, which means they will continue producing more or less what they're producing now? It's important actually that they cut, because the expectation is that the demand for OPEC oil, especially in the first half of next year, will be close to 1 million barrels per day less than what they're pumping now. So that's what the market was looking for OPEC to do, so it might be a bit disappointed.
All right, 63.2, that's where Brent is currently trading around that level. And we'll find out more, of course, over the course of the day. But let's turn to the Asian markets now, the equity markets. Sophie Kamruddin is joining me from the Bloomberg studios in Hong Kong. Good morning, Sophie. Seems like it's going to be a positive end to the week, at least at the start of trade.
Yeah, Asian stocks making modest gains this Friday, while bonds are falling and treasuries just holding steady at the end of a choppy week. And when it comes to the yen, drifting at mid-108 levels, while the greenback trades at a one-month low before that U.S. jobs report due later on Friday. Now, over in Tokyo, Japanese stocks are rising and set for a second week of gains, that risk on toe not being overshadowed too much by dismal household spending data from Japan. Now, elsewhere, it's the Kospi that's leading the region higher, halting a three-day drop drop, while Sydney shares are also gaining ground, and the Aussie dollar little changed for the moment after being weighed by soft retail sales and GDP data that has boosted RBA rate cut bets. Now, here in Hong Kong, stocks are higher for a second straight session as we wait on more protests planned in the city this weekend, and stocks in Shanghai adding about 0.1%, and Chinese bonds edging higher on expectations that the PBOC will inject liquidity via its medium-term lending facility today to roll over maturing loans that expire this Friday, nearly 190 billion yuan worth. Back to you.
Thanks so much for that, Sophie. In the U.S., House Speaker Nancy Pelosi has put the House on a timetable for the impeachment of President Donald Trump. In an address, Pelosi said that Trump leaves them with no choice but to act on the impeachment process as he is undermining national security. Joe Sobzik of Bloomberg News gets you the details.
The articles of impeachment, which are essentially like an indictment in a criminal case, what they are looking at this point is obstruction of Congress, abuse of power, and bribery. There may be some additional ones that they may be looking at as they get toward actually drafting the articles. The timeline that Pelosi has set out here is pretty quick. There is a hearing on Monday of the Judiciary Committee, and then there will be another meeting on Thursday or Friday probably, where they'll be actually drafting the articles of impeachment and sending those for a vote eventually to the House the following week before the Congress gets to its holiday recess on December 20th. The Speaker has said that there has been sufficient evidence for the charges thus far laid out in the investigation, though a lot of Republicans and a few Democrats have been pushing back, saying that they should take some more time and dig out some more information if they want to make these valid articles of impeachment. But it looks like at this point that they're heading down the road to get this done before the Christmas holidays and sending it over to the Senate for a trial sometime in January.
Joe, in terms of what happens next, has there been any reaction from the rest of Washington? Because as you say, if this does head to the Senate, that's probably where it's just going to quietly die, isn't it?
Yeah, there has been no break in the solid wall of support among Republicans for President Trump. The president himself today essentially said, bring it on and let's get it over with. The Republicans are talking about mounting a fairly vigorous defense during a trial in the Senate that would allow them to pull in some of their own witnesses, since they have the majority there, to rebut some of the charges leveled by the Democrats. It will probably go there, and as you say, it's end in his acquittal, but it will be also a political issue going forward, because as we get into 2020, the political campaigns, both for President and Congress, will be getting underway, and it's certainly going to be a subject when the candidates are out talking to voters.
All right, let's also look at what else is making headlines across the globe. Jessica Summers of Bloomberg News brings you the first word headlines.
OPEC has reached a deal on oil production that leaves supply levels barely changed in a market forecast to return to surplus next year. Meeting in Vienna, ministers agreed to deepen the existing output curbs target by 500,000 barrels a day, essentially formalizing the extra supply restrictions that have been in place for most of the year. Crucial details have yet to emerge, and the decision must be ratified by the wider group OPEC+. Saudi Aramco has successfully launched the world's biggest initial public offering. It raised $25.6 billion after pricing shares at the top of the marketed range. The IPO values the mammoth energy company at $1.7 trillion, below the kingdom's original hopes, though, of $2 trillion. Listing Aramco is a crucial part of plans to wean the Saudi economy off fossil fuels. And Boeing has held talks with pilots, cabin crew, and aviation consultants in an attempt to build trust in the changes it's making to the 737 MAX. The company says it's confident that new software will win regulatory approval, letting the plane back into service. It's been grounded since March after 2 fatal crashes linked to flight altitude sensors. Some airline crews say Boeing is a long way, though, from regaining trust. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
All right, let's take a look at the trade setup for the day in India. Agam Vakil is here to tell you all about that and also to tell you what's happening in the futures and options space. Agam, I was watching the SGX Nifty. It started off just a tad in the red and then it turned a little bit. So it's fairly a bit of uncertainty at the end of the week as to how we're going to go, especially after yesterday.
Sure, absolutely. Well, again, for now, what we're seeing is the SGX Nifty advancing, and we're about up as much as 0.2%. Where do we go from here, and can we counter some of the slackness, the consolidation that we've seen around the 12,000 mark? That's the big question we're asking right now. But moving on, we do have some amount of weakness seeping into the Nifty yesterday. Very mixed cues and subdued cues, muted cues when it comes to the broader markets. The banking industry is not doing too much except for the PSU banking index, which did see some amount of weakness. But the ADRs for now, well, not too much traction there. Tata Motors is down by as much as 2%, but we don't have too much going in otherwise, not too much change coming in. In terms of fund flows, FI has bought equity to the tune of 653 crores, and DI is selling 410 odd crores on a net basis. And in terms of contributors, again, what we actually saw was HDFC Bank, Axis Bank, and SBI weighing down on the indices. Reasonably heavyweight private sector banks, which also weighed down on the banking index. But let's move on and talk about the futures and options space. And again, while over the past 3 days, we really didn't see too much activity. Yesterday was a day where, because it was options expiry, the weekly expiry, we saw unwinding to the tune of 4% in futures as well. And the banking futures, so we're seeing unwinding of around 4%, 4.5%. But moving on, in terms of open interest distribution, still a 500-point range, not much changes. What has, however, seen a lot of activity in is the 11,800 put, which is seeing a little more, accumulation in OI. But moving on to your VIX, that's up as much as 7.5%. It may be up 7.5%, but it's nowhere near 15, 16, 17, where things could have gotten a little more precarious. And the Nifty put call ratio, gyrating between 1.5 to 1.3. For now, 1.5. And in terms of stocks, what we are watching out for is HCL Technologies. Tata Elxsi saw a sharp up move yesterday and 34% increase in open interest. A lot of volumes in the cash markets too. Equitas Holding, IGL, Interglobe Aviation. Interglobe Aviation was another counter, but this time towards the losing end, a lot of shorts building in. And in terms of stocks which saw unwinding, Canara Bank, Torrent Power, and Z again, where we saw short covering coming through. So another, important stock to watch out for in today's day of trade. Alex, once again, mixed cues. Let's wait and watch as to where it takes us today.
Thanks so much for that, Agam. All right, let's quickly go across to Somit Sarkar now, who's got all the stocks in news. Good morning, Somit. What's on your list today?
Good morning, Alex. I'll start off with Yes Bank, where Moody's has downgraded the bank's long-term foreign currency issuer rating to B2 from Ba3, and the outlook on the bank's rating is continuing to remain negative. Now, the downgrade was to factor in the bank's pool of potential stressed asset and low absorbing buffers against those assets, which will add pressure to its funding and liquidity, creating additional risk to its standalone credit profile. Second one is All Cargo Logistics and Gati, where the All Cargo Logistics board has approved acquiring nearly 19.4% stake in Gati for 178 crore rupees, and the company will acquire 1 crore shares, that is around 8.5% stake at 75 rupees, which is at a premium of 13.6% to yesterday's closing from its promoter. And separately, it will also acquire nearly 1.33 crore shares via a preferential issue, which will come up to around 11% stake post the issue at the same price. Now, this means that there would be some fund infusion coming in Gati. Now, as All Cargo Logistics stake in the company would increase nearly 19.4%. Post both these transactions, the company has to make an open offer and is doing so to acquire to public shareholders of around 26% stake at the same price, that is 75 rupees per share. Now, All Cargo Logistic Management is expecting the entire transaction to complete by March 2020, and separately All Cargo will also raise close to 195 crore rupees via issue of non-convertible debentures, which would be mightily to fund this acquisition. RBL Bank, where they have approved allocation of 5.77 crore shares at 351 rupees per share. Now this price of 351 is at a discount of 4% to yesterday's closing. Now RBL is raising close to 2025 crore rupees via this QIP, and one of the investors which had promised to invest in the company, this Bajaj Finance, did not participate in this QIP. Mahindra & Mahindra will also remain in focus because they have acquired nearly 36.6% stake in Meru for 45 crore rupees. Nirlon, because they have signed a long-term lease and license agreement with JP Morgan, which will take up nearly 1.15 million square feet of office space by second quarter of financial year 2021. And lastly, VST Tillers, where they have come out with their sales number, and power tiller sales are down nearly 41% for the month of November, while the tractor sales are down nearly 10% compared to last year.
All right, thanks so much for that, Sumit. Now, all eyes were yesterday on the Monetary Policy Committee of the Reserve Bank of India, but the Reserve Bank of India also released its final guidelines for on-tap licensing of small finance banks, which could spell some bad news for India Post Payments Bank and Paytm Payments Bank. The regulator's final norms resemble its draft notification, but it has added specific steps for existing payments banks to upgrade to small finance bank status. Vishwanath Nair has this report.
The Reserve Bank of India's latest guidelines on on-tap licensing for small finance banks could pose some bad news for India Post Payments Bank as well as Paytm Payments Bank. Remember that both these entities have recently expressed that they would like to graduate and become small finance banks, because essentially it opens up the option of lending to their customers, which is something that will eventually lead to some kind of fee income. Both these banks, however, will probably not be able to apply for a small finance bank license in the way that the RBI has created these final guidelines. First and foremost, the RBI very specifically says that for a payments bank to apply for a small finance bank license, they would have to be in business for 5 continuous years. In both these entities, that category sort of goes away. India Post Payments Bank as well as Paytm Payments Bank came into existence only in 2017. So that 5-year mark has not yet been reached by both these entities. They did receive their license back in 2014. So it took about 3 years for both these companies to come up with a viable business model and then start their payments bank business. Another issue which will come in the way of India Post Payments Bank is with respect to the ownership of the bank. Government of India owns 100% stake in India Post Payments Bank, and as part of the RBI's latest guidelines on small finance banks, it says that government-owned entities as well as any payments banks that are promoted by government-owned entities, they will not be allowed to participate and become small finance bank eventually. So obviously that means that India Post Payments Bank, which had announced in August that it would like to become a small finance bank, their application would likely not be considered by the Reserve Bank of India. Paytm Payments Bank, of course, has also some ownership issues. Vijay Shekhar Sharma, he owns about 51% stake in the payments bank in a personal capacity, while 197 Communications as well as its subsidiaries own the rest of the stake. How the RBI will view this business and whether it will consider this as a large industrial house owning a payments bank. Remember that the RBI defines a large industrial house as any industrial house with 5,000 crore or more worth assets, as well as a structure where more than 40% of its total income is contributed by non-financial businesses. So how the RBI is going to look at the structure at Paytm Payments Bank and whether it will consider them eligible to participate, become small finance bank eventually in a few years when it crosses that 5-year mark, that remains to be seen. However, as of now, this seems like a little bit of bad news for both these entities.
Now, bad news also came in the form of the Monetary Policy Committee's decision yesterday. They surprised the street on Thursday by leaving key benchmark interest rates unchanged. This at a time when the street had priced in a 25 basis points cut after growth fell to a 6-year low. However, some economists and money market experts are finding merit in the MPC's actions. Ida Duggal spoke to money market expert Anant Narayan and Pranjul Bhandari of HSBC, and here's a slice of that conversation.
It did come as a shock But in retrospect, I'm seeing some merit in what they did. I think the macro package confronting the RBI and all of us now is quite different from the macro package in the last policy meeting. Inflation is up. Growth seems to have bottomed out, even if it won't accelerate at this point. So it's a very, very different situation. But I think more importantly was the whole transmission and what he called optimal timing of the next repo rate cut. If the RBI keeps cutting the repo rate and the transmission doesn't happen and all the spreads remain elevated, then there is a problem. Look, the markets always takes cues from the RBI, but actually even the RBI takes cues from the market. If the RBI keeps cutting rates and it never gets transmitted, then the repo rate will lose its relevance really. So I think from that perspective, this whole optimal timing of the next rate cut makes sense to have waited out this time. So, I'm making my peace with it, but I think not a bad decision.
All right, I'll come to some of the fine print of the eco data. But Anant, what did you make of it? I know I can imagine a bunch of your friends in the debt market sitting in trading rooms would have been, not particularly thrilled at this.
Not at all. In fact, the bond markets reacted pretty violently, I would say. More than the bond markets, the swap markets also reacted pretty violently, 25 basis points or so move, and it doesn't look like it's over. Look, this was a surprise. I don't think any economist or any analyst, at least publicly, called for a no change in rate policy. To that extent, a 6-0 move for no change is a complete surprise. I agree with Pranjul. If we ignore the fact that this MPC has been particularly dovish and accommodative, and if you ignore the fact that in the last policy they actually said that they will stay accommodative as long as it takes for growth to revive, we've sort of attached when in doubt this MPC will be dovish kind of an outlook. That's been challenged right now. But if you ignore that part and you look at the complete context, inflation is high and looking very, very tricky. Your fiscal deficit is looking, the balance has for a while it's looked difficult. It's looking particularly difficult now with low taxation and a lot of expenditures. And while growth is a problem, I've argued with you earlier, Ira, that I'm not sure how much of rate cuts could really help in the growth situation. So in that complete context, given that we've already had 135 basis points of rate cut, and that we've now flooded the market with banking liquidity at least, there is a case for a pause. I guess we were all taken in by the fact that we expected this MPC to err on the side of being dovish, and practically nobody expected that the MPC would shock all the analysts by going completely against what they were expecting. So yes, bond markets have reacted violently. One last point I'll add, Ira, is that I think the fear that the bond markets will go through is, what is it that the MPC sees or fears that has allowed them to go 6-0 into a pause at a time when everybody else is expecting a rate cut? That's the only fear that will kind of persist for a while now.
All right, and that's the question. Meanwhile, let's take you through some of the stories that you'll find on the website BloombergQuint.com. First up, it's not just onion prices that's troubling Indians. A survey by the Reserve Bank of India showed that consumer sentiment has fallen to its lowest since at least March 2014. Consumer confidence, as measured by the RBI in its current situation index, fell consistently from 104.6 in March 2019 to 85.7 in November. In the aviation space, India's national carrier, Air India's losses continue to balloon. Air India's net losses in 2018-19 is provisionally estimated at 8,556 crore rupees, according to Civil Aviation Minister Hardeep Singh Puri. He reiterated, though, that the government's commitment towards privatization of the airline is intact. That's all you need to know going into trade today, but do stay tuned. There's a lot more coming up in just a short while. This is Bloomberg Quint.